All right. Good morning, everyone. Unfortunately, Joe's computer decided to restart right as we started, so he'll be jumping on shortly. We've got Stan back, so welcome back, Stan. How's everything been?
Pretty good. Can't complain. Been keeping myself busy over here.
I
Uh,
think I just saw you traveling recently. Where'd you go?
I went over to New Zealand and Australia. Spent about 2.5 weeks over there. Just traveling to pretty much all New Zealand and did a little bit of quick stop over at uh, Australia, mostly Cairns and Sydney.
All right, nice. Now, did you put that on your buy now, pay later, or did you pay? How'd you pay for
Uh,
that? So,
I paid 100% upfront for that one.
nice. So yeah, today, hold on, Joe's coming in now. So let's see. So Joel, it doesn't count as showing up on time, even though you were here earlier. But thanks for jumping on, Joel. But yeah, today we're gonna kind of talk about the buy now, pay later kind of mindset and why it's kind of possibly holding people back or getting them into maybe financial struggles when they don't even realize it, right? So, Stan, you have any thoughts on that, or like we talked about, you just went on a trip. So, what was your thoughts on purchasing or paying for that trip?
My thoughts were essentially make sure that I have all the funds I need to pay for everything up front. Before I even went on the trip, the entire everything was booked. Everything was paid for well ahead of time. I budgeted for it months ahead. For example, I booked the trip. Uh, I want to say last November, October, November range, and then I just been made sure it was paid well before I actually began the trip itself. That way, when I got to Australia itself, I didn't really have to worry about finding ways to pay for the rest of the trip. Everything was taken care of. That's the way I do just about all my trips. Uh, that way, I don't have to worry about carrying credit card balance. I can make sure everything's paid off. And my mentality for things like that is if I can't pay a credit card balance off by the end of that month, then I know I can't afford it for that specific month, and I wait to make that purchase until another day.
Joel, you being a lender, do you see this impacting a lot of people when they reach out to you?
Yeah, I mean, from a lending standpoint, credit card debt is higher than I remember seeing from just, you know, a quantity and just dollar amount across the board. People are struggling, to pay bills, let alone save money. So, one of the mantras that I hear a lot is, "I'm just praying for things to get better in the future." And there is optimism for whatever reason in that, and I don't know how, what, or where, but that's just what I'm seeing a lot of.
All right. Yeah, I think that like you talked about, credit card debt is rising, and some people, unfortunately, that's how they're able to survive right now, right? They're putting things on credit and whatnot. But I think a lot of it too is just, I mean, I definitely fell into this trap of maybe financial illiteracy and whatnot, and not looking at it from just okay, I can break this down into small payments so I can afford it, right? When you're not looking at the bigger picture, like Stan is breaking down, right? Like I want to make sure I can pay it off or pay off my credit card in full by the end of the month, or when the bill is due. I'm not going to worry about interest or accruing any interest. So it's just a mindset shift, also, I think. For me though, I think the struggle has always been too is it's so convenient. With access now, and you don't see that money, so you don't realize it's actually leaving your bank account, or you're not putting money out there. So there's no real physical transaction in a sense. You see that as a part of the problem.
I think a lot of it is just kind of the cultural mindset where right now we do have a very strong consumer-based mindset where people always want that next dopamine rush. They want to have that the latest toy, the newest car, the fanciest trip, and they're not really concerned with how to pay for it or whether or not they can afford it. They just want the essentially the dopamine hit from having a new thing. So I think that's kind of a big part, and that is something I noticed that is much more uniquely American versus other places I've been where that mindset isn't quite as prevalent, where financial literacy, from what I've seen, is more developed in other countries I've been traveling to.
Hey Joe, quick question though. What channels did you pair today? Did you pair Instagram by any chance?
I did not pair Instagram.
I'm not able to go live on Instagram anymore. I don't know why. All
I
right.
give up hope on Instagram.
Yeah. No, before I could, but the go live button doesn't activate anymore. Well, we'll figure it out later. But yeah, we got say some shout outs to everyone tuning in though. We got Hyder here as usual. Thank you. He says Stan is way more detailed and organized than he is when he plans for trips. But Hyder's here, JC's here, morning, old guy REI Frank. Just a reminder, everyone, Frank is selling ORAT t-shirts to donate to the Blind Center where the event is held in February. Do I have it? I do have it here. So hold on. This is the front view of the shirt. And we also have the back view. I found my tribe. So if you haven't picked yours up, there is no, it's a unisex version. So Flavio, I messed around with him. I told him he got the girl version for some reason in the mail. But yeah, go check it out. The PayPal link is in the chat, and it's for a good cause. We get Cashflow Johnny here. So morning. Thanks for stopping by. Big Val's here. Harsh Reality. Rad's here. So morning, everyone. But yeah, I think, definitely it is something definitely I want to start even my son, right? He doesn't even realize probably when we're buying things, right? He's not seeing money leaving my wallet or my pocket, right? He just sees me tap my watch or my phone. So he's not seeing the idea of, okay, you have to pay for these things in a sense, right? He just probably sees it ending up in our cart, right? So I think it's definitely something we have to be aware of for the younger generation. Do you see your kids not? What about you, Joel?
Yeah, we go to Walgreens around the corner from our house to pick up prescriptions or whatever, and there's this little aisle with the little game, little toys, and like one of our sons loves the Spidey and Avengers little handheld toys, and then like mystery packs. We don't know which one you're gonna get, and it's always like, hey, Daddy, do you have dollars so I get a toy? And it's like, not today, or yeah, let's do it today, or they're on sale. And I carry cash with me for that exact reason, so they can see, that there is money transacting rather than just the numbers in a wallet. So it's hard though because they don't get it, they don't understand it. So it's good and bad and indifferent. But yeah, it's definitely an ongoing journey to build that relationship with money.
I was the same way growing up, where I still remember when I was growing up, always just telling my parents to put it on the credit card because I didn't really quite understand the concept of money as a child either. I think that's one of those things where you don't actually understand money until you're in a position where you are finding a way to earn money one way or another. So until you're actually putting in the work and then getting the money in return, and you start kind of equating the time and effort you put in with the amount of money that you are receiving in return, and finding ways to evaluate your time and based on that. Prior to that, I think it's just kind of like an abstract concept growing up. It's not something that's taught in school at all. At least it was never taught in school when I was growing up. Any kind of financial literacy, business, investments. None of that was. We had a half semester class for basic economics when I was in, I believe, 11th grade. Aside from that, it was never a subject that was taught in any primary school I've been to.
Joel, this could maybe, since you are in lending, you kind of operate on your own in a sense. Sardar here is tuning in. I haven't seen this person, but thanks for tuning in. Don't forget to subscribe. I'll put Joel's links, his YouTube channel, Instagram also in the chat. But he says he's into financial consulting since 2 years and wants to start his own thing now. Is it too early? So I think Sardar's asking if he should maybe venture, or this person should venture out and start their own business in financial consulting. What is your thoughts on that? You think people should have so many years of experience or whatnot, or would you have them jump in right now?
Yeah, I mean, I'm going to back up a step because a lot of the people that I see that start their own business, they'll have a W-2 job and then they'll do something on the side. And so once the side thing scales and builds, then you have the confidence to be able to ditch the 90 to 5 and the W-2 to do your own thing. That's the typical thing that I see with my network and just in general. Now, if you're talking about consulting, maybe there's a non-compete, maybe there's other limitations of doing that separately on the outside of the current employment agreement. So I think that's one thing that comes to mind is if you can do it on the side somehow and build it up before you go head first into the deep end. But yeah, I guess if you want to let us know more in the comments, Sardar, of hey, can you do it on your own while keeping your current job, or do you have to? If you're going to do it on your own, do you have to go all in? But a lot that goes into that conversation.
Yeah, I think a lot of it Hyder kind of brings up also is kind of thinking of reputation. Do you have an established reputation? Are you able to talk financial planning in your sleep? But I think also to Joel's point is it's also what kind of maybe relationships you have with your clients now, and like you're saying, non-compete, but will these clients follow you, right? Like if you were to venture out on your own, because I think when my parents were using a service, that person went out on their own after, and it was kind of like a lot of these people that already built a relationship followed this individual after anyways, right? So that's a good way to maybe make sure that you're going to have some clients initially when you do make that transition. So let's see. As far as
Well,
going back, yeah, go
there's
ahead.
one thing I want to throw on there. I go backward into my journey. This is in 2010. So I had been working at a big bank, Citibank, for 5 years. At that point, I was in my mid to late 20s, and then I was in inside sales, right? So sales are coming in, because of the Citibank relationship that I worked in, and then I had an opportunity to go do outside sales lending, right, where you go build your own relationships, go get your own business. And so I took the leap in 2010 into 2011, thinking that the relationships that I had built up would be able to sustain me and I'd be able to get enough to be able to survive and then build and build and build and build. And so I didn't close loans for a number of months. And, thankfully I had enough of a, savings reserve built up that I could withstand, that gap of being able to generate the income that I needed. So I think that part too is really important, is having that safety net built up in case things take longer than you expect.
All right. So yeah. So Stan, do you think? So going back a little bit to the main topic, do you think buy now, pay later is more to benefit the consumer or the company? Like, who is it kind of designed for?
It's definitely designed for the company. If it didn't provide any kind of benefit for the company, these companies wouldn't be providing the service. It's kind of a way to encourage additional sales for the company. If a company has a $5,000 TV that they're trying to sell, it's a lot easier to convince consumers that they can afford $1,000 a month as opposed to convincing they can afford $5,000 up front, because consumers, they have the ability to kind of psychologically convince themselves that $1,000 per month isn't that big a deal, even if you don't have interest. Like, I can understand if there's no interest involved, then it can be a win-win situation, which is one thing I do. If a company offers me a financing service or a financing option with absolutely no interest, then that is something I take advantage of, simply because that way I can keep more of my money in reserves and pay for it at a more reasonable pace without having to accrue interest. But as soon as interest gets tacked on, then I don't think it's beneficial for the consumer anymore. Now you're just paying the customer not only for their product or service, but you're paying them interest on top of getting that product or service. So in that case, I think it's definitely more beneficial to the company directly or the third party finance service that they're likely using to finance the purchase.
Sardar brings a little more information. He says, I'm young, early 20s. It's just I've thought if I can earn thousands for someone else, why not for my own thing? I do bookkeeping, tax, and compliance for corporations. Okay. Yeah, I mean, I think definitely it's really, you got to know yourself too, right? I mean, not everyone is an entrepreneur, right? Or has that ability to go out and want to start their own business. But definitely, it can allow you more freedom in a sense, right? But you really got to understand yourself and in your situation, Sardar. But yeah, definitely, I think it's something you should look into further. I mean, I think a lot of people find it more enjoyable, I guess, in a sense, to be an entrepreneur and have that freedom and not really have to work for someone else in a sense. Hey, Steven's here. Good morning. He's in Canada, new investor looking in Pittsburgh market, and he's doing pretty good. He's starting to notice some things that he's brought some listings to everyone to kind of take a peek at, and a lot of them are going, or one went under contract in a few days already. So it's kind of like he's kind of looking at things that make sense, and other people are noticing it too. So that's a good sign. Let's see what else.
Going back to the breaking apart into your own, one thing that you always have to remember is, are the clients that you're working with, are they going to you because specifically you, or are they going because you happen to be attached to the brand name that they are comfortable with, and you just happen to be the representative of that brand name that they're most comfortable with? For example, if I'm going to mortgage mortgage loan 123 company, and I happen to like one of the representatives there, yes, I might like him as a representative, but at the same time, I also really like the back end things that are happening with that company in terms of how fast their processing is able to get me the information I need, how fast they're able to give me answers because they have people working in the background in addition to the upfront representative. So there's always got to be that distinction between the individual and the company behind the individual.
All great points, Dan. Very good. Yeah, I think there's a lot of factors to consider. So Joel, going back to the buy now, pay later again too. But do you even? I even looking at it from a home purchase side, right? I think a lot of people look at it more from a payment standpoint and not what the purchase price actually is. And do you think do you see people maybe overextending themselves in a sense because they're only looking at the payment and buying a home bigger than they may need?
I don't want to speak for, the majority, just in terms of what I personally see. And, you know, some of it is, hey, I've got one borrower who's qualified with the right profile and credit scores, but it's a family, right? It's a household. And maybe it's two parents with kids and you have two dual income earners, or I've even seen where you've got now combining, layers of family with, your husband and wife, and then maybe it's a a parent that you're going to bring in together, and so one person qualifying on their own, the numbers maybe tight, we're kind of fitting into the bucket, but as long as we get the deal done, then it's like, okay, well, they can afford it from a household perspective because you have more than one income earner. So I've seen that a lot, but at the same time, there are some people that just want to be into a home, want to have that for their family or for their kids or for whatever reason. And yeah, they go into a higher payment because that's the lifestyle that they want for many reasons. And so, one of the things that I do see a lot, and this is kind of on the other side of that, these are people, some of the people are, hey, I know that I can make this work and I will make it work. And then there's other people where I see, the rent may be a very, very low number. They're not saving any money at all. And now they're going to get into a housing payment that's twice the amount or even more. And then I'm thinking to myself, how the heck are you going to be able to afford a housing payment that's double when you can't even save money right now as it is? And so I do see a lot of that, unfortunately. But at the same time, though, a lot of the things that come through is people are just trying to understand. They hear about certain programs or hear about certain types of ways to get into a home with low money out of pocket, and they want to start the process and just learn the basics. And so we go through the process and we figure out credit scores and budgets and all these things. But yeah, I do see some pretty unique things for sure.
What do you think, like the long-term financial side of it's going to be, Stan? Like people, using these buy now, pay later programs and whatnot. Even just a mindset shift towards it.
That's long term. It's kind of hard to predict exactly what's going to come up with it. Might lead to people getting in over their heads where they make an initial payment, they kind of keep buying more things and winds up taking them months to pay off fairly minor purchases. You have interest rates built on top of that. There's definitely the potential of getting way over their head where essentially they're just snowballing themselves into a heavy debt load. It's kind of compound interest where compound interest can either work for you or it can work against you. If all of a sudden you start getting behind those payments and the compound interest starts being tacked on, you're just making a worse and worse situation for yourself where you're trying to dig yourself out of a larger and larger hole. So I think that could be a potential future problem where you just have a unsustainable amount of credit uh, that you have difficulties paying, and it starts eating into your other bills.
Sardar says he's from Pakistan. My business motto is to target UK and US clients and charge them peanuts. Exchange rate is good here. I can hire a whole ass team for $1,000. Uh, it's funny you say that, Sardar. I mean, my one of my college roommates was from Pakistan, and I always meant to reach out to him and see what he was doing. I know he was in engineering, but I've never been able to find him since college. Um, but do you think?
It's not a bad idea to charge substantially less, but the problem is you still need a quality product to back it up. Like, especially if you're talking about lending, do I want the lender that's going to be the cheapest price but might not be able to come up with the financing? Or am I willing to pay more to make sure the financing is secured so I can actually lock down the property I'm targeting? So that's a major obstacle for the cheapest possible price mentality where can you still close? Do you still have everything behind you in order to get the financing to the investor or to the client so they can make whatever purchase they're trying to make?
Let's see. Joel, do you think any situation where buy now, pay later might actually make sense?
Well, if I bring that mentality into, buying a home, the biggest thing that I talk about is what's your trajectory. If you're gonna buy a home today and it's a stretch, but then you're gonna get a raise in 6 months, or you're in a commission job and your trajectory is higher, then you have more margin for error as you navigate, the pitfalls of running your budget. But if you're flatlining with your career or your income, I mean, you don't have as much margin for error when you're getting into a home payment that is very, very tight. So that's one of the things that I talk about a lot. And when you're younger and don't have kids and you have the ability to put more time into pull that lever of generating more income, that's just an example of having more margin for error. So it can make sense. And the thing about real estate is that unlike buying a stock, right? If I want to buy $10,000 of stock, it's a 1-for-1 type of exchange, or maybe you have margin, right? But that's only a short-term type of thing. Whereas when you buy a real estate, let's say you take that same $10,000 and you buy a home for $300,000, that entire asset of $300,000 is going to appreciate or depreciate, but in theory, appreciate 3% per year. That's if you get a meager return on your appreciation of 3% versus putting in 10K to buy 10K of stock and you get 10%, which one's going to have a greater return on your dollar in that example? And 1,000 on the stock example versus 9,000 on buying the home. You have a little bit of leverage in real estate. So the trajectory part, hey, things are going to get better. I've seen this in the past with in the medical profession with people that are in their residency and they squeeze into a home loan to buy a house, and then a year or two later their income triples or quadruples as they get into their doctor full-time income. So it just depends.
For me, like the industry I work in, oil field, I kind of have a different perspective just because the industry itself is so cyclical. So it's very hard for me to think ahead. Okay, I'm making what I make now. In 2 years, I'll be making more, just because the industry can easily swing back down at some point. So it could go from a very easy time to make money to also a very difficult time to make money within the industry. So that's why I always come up with the mentality of the situation I'm in now. Can I very comfortably make payments right now if I take out financing and still put money to the side in case of emergency?
So kind of slightly different. Credit cards aren't exactly the same as the buy now, pay laters, but both of you have young kids also. Would you I saw someone post on X as far as they would never put their child on their credit card as an authorized user to start building up their credit while they're younger. Have you guys ever thought about that? Do you folks have your kids on your credit card as authorized users to start their credit building now? You guys have any thoughts on that? Stan, maybe?
I haven't done that yet, but it's not a bad idea to kind of jumpstart their credit score. I I know that that was when I was in college. That was one of the big things that credit card companies were targeting, where they knew exactly where the freshman dorms were. They set up tables right in the freshman dorms, offering, like, "Hey, sign up for this credit card, you get a free toaster," or something very menial like that. And they easily got a lot of freshmen to sign up for credit cards that they had honestly a fair amount of them were not really competent with how to use credit yet. So it's the freshman in college. I was one of them. It's the first time they're getting freedom, the first time they're getting any kind of sense of being able to buy whatever they want. They're in an environment where they can go out and get a pizza every night. And it's one of those things where those kind of purchases do add up. Like, yeah, it's kind of like I'm sure everyone's tired of hearing the avocado toast example. But the avocado toast example, it's kind of a mindset example where, yeah, if you go out every now and then and you buy avocado toast, no big deal. It's not really going to harm anything. But if you're consistently going out and getting a avocado toast every single day, along with a couple two lattes every day, eventually that kind of spending does wind up building up and being a substantial amount of money after a couple weeks or a couple months. If you're putting that all on a credit card of interest, then all of a sudden you get in a situation where all you're able to do is afford the interest payments on the loan, and you're not actually paying the loan down. You just wind up in a situation where you're running on a perpetual hamster wheel, which is great for the banks, but very, very bad for the consumer.
So we got Stay Winning Hugo here. So what's up? There's his YouTube channel. So go please subscribe. We'll give him a good follow. We got to get him back home. I need a Bitcoin person on. I keep getting asked. So Hugo might have to be my guy. But to Hugo does say, right, set them up to win. I think he's referring about putting your child on your credit card as authorized user. But that person that posted that on X, their point of it was, I don't want my child almost skipping the steps of learning how to build your credit. They were kind of talking about, like, I think it might have been sports. Like, would you let your child skip over, the basics, the fundamentals, the practice to build a level to play at a certain level, and then just put them into this, have them skip all the hard work, right? So that was that person's standpoint of, I don't want to put my child as an authorized user while they're young to build up their credit. So at the time they can get their own, they're already ahead of everyone else. So that was that individual's take on it. So I don't know, Joe, now that you had some time
Yeah,
what's your thoughts on it?
I'm on the same wavelength of that because the steps of it, like just think about when you're 16, right? How excited you are to go get your license and drive and have that freedom, right? I mean, I wouldn't say getting a credit card is the same thing as getting your first car or getting your license in terms of freedom, but um, I believe that, well, me personally, knowing what I know now versus what I knew 20 years ago, I want my kids to have that entrepreneurial spirit. Um, you know, I can't now. Myron Golden talks about the cost of doing things, and it's not the cost; it's the time. And if he wants to be able to pay for something, he goes and creates an offer to his marketplace or his audience to go generate the income to go afford XYZ private jet or whatever it is. And so, I'll give an example in my world. I was at the library that just got remodeled here in St. Louis, and as we were leaving, and it was been a long day, and they were acting a fool, one of them picks up a rock and just throws it through a window, breaks the entire window. And fast forward to today, that was like 10 days ago that it happened. Okay, you're going to lose privileges on certain things, blah, blah, blah. But then now I've already kind of set the precedent with some of my neighbors that, hey, we're going to come over and what can we do in your yard, pick up trash or I'm sorry, pull weeds or do things around the house to be able to, create value. So we're going to go knock on the doors. I've already kind of laid the precedent with my neighbors. Hey, little twin boys that are 5.5, we're going to go knock on the door. What do you need around your house? And they're going to do some work for a quarter, right? They're going to generate income and learn what it takes to be able to put yourself on a ledge. But what can you do to create value in the marketplace as a 16-year-old or 17-year-old or 18-year-old? And if you can build something small, then when you turn 18 or 19 or 20 and you want to be able to maybe scale and afford to be able to, acquire certain types of equipment or whatever it is, then you can go get your own credit. But before that, you have to do it in a certain way that's going to limit you. So hopefully when they turn 18, they'll be excited to go get that credit because now they can open up different avenues that they wouldn't necessarily have been able to open up before. So I like the idea of the process that you mentioned before, Mark.
All right. Let's see. Yeah, it's a tough one. I think I want to give my son, all the tools to succeed. And I definitely think if they're able to have that credit score built up as soon as they graduate high school, get some a job quickly, get some W-2 or something on their tax returns, and that's how they can get on the property ladder much quicker also, get into some sort of house hack or whatnot. So I definitely think that building up that credit ahead of time is a useful tool. But I think it all same thing. It's going to come down to your child, right? You got to see how your child is, and do you think that they're going to, I guess at a certain age, you start realizing is your child has that mindset in a sense, right? Are they going to use it to their advantage, or are they just going to kind of freeload off of things, right? So I think that's where you kind of got to kind of see and monitor your child, right?
I'm kind of more of the Joel on his mentality where credit card or any kind of line of credit, it's just a tool. Tools can be good or bad. It's the same thing as a hammer. I can give one person a hammer. He can hammer on a couple siding onto the back of my house and generate value that way. I can give a different person a hammer. He can break his own hand within an hour. It's credit's the same thing. If you give one person credit, you can use that as a great way to leverage and put himself on the real estate ladder in a property he can afford. You give a different person the same amount of credit, he winds up with a fair amount of consumer debt on a bunch of stuff that he doesn't really need, and now he's once again running on the hamster wheel trying to keep up with payments. So I think that the training, mindset, and understanding and financial literacy is a lot more important to obtain prior to being given that line of credit.
Oh man, does that mean I think like Flavio, or Flavio thinks like me? Says I added my son to the credit card. I want get enough credit at the age of 18, help him to afford his first rental. Damn it, man. All right, well, I guess me and Flavio are on the same wavelength. Jovi says, can't you teach them the process, but also give them a head start? I definitely think you can. I think there is, I know there is some tools out there, like certain platforms that you can get your child a card also. And it's like an app that you can monitor their credit, what their purchase. It's almost, and it's the same thing using a debit card for their credit. I think it's a debit card, but it's under a credit card where it helps with your credit score. So that way, you make a purchase, but it comes directly out of your account, right? So that way they're also able to see like their bank account, that the money's coming out of that account and whatnot. And I think that's a good way to also teach them that, yeah, we're not paying cash, but the money is coming from somewhere. And then it also links that you can put like chores. I think you can put like, this is, whatever chores, and there's like a dollar amount associated with it where they can get paid, and it's all from your app. So when I was with some friends in Georgia, they were using that. Yeah, Hyder is going to be in Alaska soon, so this might be one of the last lives he's going to be on. Hyder, are you still working with that same company? I thought your boss sold it or something, or whatnot. Or are you at another company now when you're going to be there? Hyder says, I always recommend to get a prepaid credit card, not really credit, but apparently the practice helps the score. Yeah.
That's a good way to kind of be able to teach the lessons and limit the potential downside.
Oh, I have to give a quick shout out to Max. Max Lintner's here, and we just gave him shit this morning on the accountability call that he never tunes into the live. So I want to make sure he knows. Thanks for tuning in, Max. But you're probably not here anymore. You probably just commented and jumped off. But thanks for tuning in, man. Sorry. So what were you saying, Stan?
I was just saying that's the limit on the credit card or having a prepaid credit card. That's a good way to learn the lesson while be able to mitigate the damage that could happen. So things like that are a good strategy. Like I definitely want to make sure I want to kind of the same mindset where I do want to make sure that my kid has all the advantages when he becomes 18, but I also want to make sure I'm not giving him enough rope to really do substantial damage to him when he turns 18. Like I keep bringing back to like as a 18-year-old me coming out of high school, I knew zilch about money. Luckily, I knew enough to not sign up for those credit cards that were being peddled in the freshman dorms. So I never signed up for one of those. But I know myself back then enough to know that if I had gotten a credit card, I most likely would have gotten myself into a fair amount of trouble. Just because I wouldn't be using a credit card for things I could afford. I'd be thinking, oh, I can buy this latest Xbox, or hey, I can go out and get a nice meal and put the meal on the credit card. And it's when you're at that age, it's kind of difficult to resist those temptations, especially once you're getting all this freedom for the first time going out of college. Prior to college, you're living with your parents. They're able to mitigate a lot of your living conditions. They pay a lot of the bills. They essentially give you structure while you're living with them. You go out to college for the first time. All the bills they're now on you. Rent is now on you. You have the freedom to purchase anything you want. You have the freedom to do just about anything you want. So it's a lot of freedom being given very, very quickly to a very young person. And there's definitely a potential for that to backfire, even if someone has good intentions. There's definitely a possibility of a backfire without the kind of the training, mentality, and education behind finances prior.
We got some great questions coming up then. So old guy REI, Frank says, it seems like we don't really understand the concept of financial literacy until we've gone through some hard times. What do you think? Do you think like that's an important step, or what do you see, Joel?
I definitely agree with that. And I was actually going to bring that up and kind of bringing it back to the credit score part of it. If you have an 18-year-old and they, so that they start to see Credit Karma and the scores are 680 and then 720 and then 740, and you don't really see it, the natural bill where you're starting at the 500s. And when you're 18 or 19 years old and living life, you probably don't need to have a good credit score. What are the chances of an 18 or 19-year-old buying a house, right? It's very, very low. It happens. I've seen it, but very low. So this is what's going through my mind. Right? Obviously, it depends on the kid, right? But I was playing golf literally yesterday with my dad and a couple of friends for the first time in a couple of years. I don't play golf. My back is messed up. I got arthritis, and I got a baseball swing, so it's just bad. I think the last time I played, I shot like a 137. It was terrible. And that was like 3 years ago.
The lower the score, the better, right?
Really? Is that how it works? Thanks, Mark. No, so I shot a 110, right? And it was a par 4. There's the first. I think I shot 26 over on the first 6 holes. It was bad. And they're like, we cap it at a triple bogey. We don't go higher than that just to make things easier. I'm like, well, if you're that bad and you do cap it, how do I know if I'm getting better? So if I shot a 110 today, and then the next time I go out, I shoot 100. But if I would have triple bogeyed it and I'm at 100 and then 100, I wouldn't know if I'm getting better, right? And I want to know if I'm getting better. I want to be able to see some of the minuscule results. And I actually, on the last 12 holes, I shot 11 over. So I started getting a little bit better. But anyway, so as a kid, I mean, if you start at a 520 credit score, then all of a sudden, you start to pay things off and keep your card utilization at 33% or nothing more, nothing less, nothing more. And you see your scores get to 620 and then 660, and you do it all on your own. in my opinion, I think there's going to be a little bit of a different level of satisfaction and appreciation for the process, which again, that's just my opinion on it.
I kind of agree with that as what he said as well. The first time I really started learning about financial literacy personally was 6 months after I graduated college and the first student loan bill came due. So prior to that, financial literacy was definitely very far in the back of my mind. Once that first bill came due, all of a sudden I learned very, very quickly about, oh, this is what credit actually means. This is what these payments actually mean. This is how much I'll have to pay over a very long period of time in order to pay these off.
Yeah, I think for most of us here, we've all made a lot of mistakes, right? So I think it's part of the journey, and like Frank is saying, it's that's how we learn. But to cash flow Johnny's point, also, he says, I've had my kids on my credit card for years now. Why not set them up? So I think that's the other. You're trying to find that balance of how to set your children up. But at the same time, you do want not like you want them to struggle, but you do want them to kind of make mistakes in a sense and learn from it and grow. So it is definitely finding that balance and whatnot. But back to, I did hear Joe mention something about not buying a home or at 18 or 19, or most kids probably aren't ready for that. And I know Dion always touches on, at that age though, you're probably closer to financial freedom than you are at any point in your life, right? Like,
Mm-hmm.
you don't, most, once you graduate high school, chances are, you shouldn't, you're not going to have any debt, student debt, no payments in a sense, right? You probably don't, you probably don't have kids at that, you're not married. So you can probably make a few steps. And, if you had that credit score to help you get on that property ladder much sooner, when you don't have these other things added to your life, right? These other obligations, and you're able to get, that 5% down, or get a house, or get a fourplex, right? And get in as soon as you can. So from that standpoint, I think in our community, we're probably going to be trying to teach our kids that, right? But for a lot of people, I think, like you're saying, Joe, to your point, most kids, and even if we try to help our kids think that way, most of them probably are not ready for home ownership, right? At 18 or 19, right? So I think that's that balance also we gotta always consider.
Well, I love that you bring that up because we're, know your audience, right? And the audience that's on here, we're all connected in some way to real estate. And so, yeah, I mean, I think if the parent wants to provide the blueprint and, believes that it's a way for that kid to be able to have financial freedom, I think if you can make it happen at 18, 19, 20, hell yeah, do it. I mean, I don't know if my kids are going to be that hell bent on it, but I mean, as they grow and mature, and you see a teenager that's making money, and then 17, okay, you know what, we need to get your scores going because we want to make sure you're ready by 18 or 19 to be able to buy a house. I think it's an opportunity for sure if they want to go down that path. And I think, like you said, if somebody goes down that path at 19 and buys a triplex, they've got the cash reserves. They've been working part-time, and then now they got a full-time job or whatever it is. It's an amazing opportunity because you have no risk. There's no risk because if you fail, who cares?
Let's see, we got Hyder says, I think it was after World War One. Germany was rebuilding and everyone started off poor. Soon, those with ambition and a financial education started building wealth, while those without remained poor. Yeah, I think we always touch on it too, right? It's really your mindset, being around others. And I know you guys probably haven't been on it, but we've had a few people in the community like Millennial Mike. Actually, Lumberjack's going to be on this week, but there's this Raging Tomato kind of debate platform on YouTube. They do different topics weekly, and you you see a lot of the audience on that platforms where they just have the mindset that everything's against them, kind of this mentality of things are supposed to be given to them, and things aren't fair out there. And it's very, and you see that's kind of the majority, I think. So I think being around this type, community, and like you said, know your audience and whatnot, it's refreshing to see other people realizing that it's still, the opportunities are still out there, right? Joe, I think he's about my comment on chores. He says, don't believe in chores. Chores are household tasks that need to be done. A job or extras earn money. Yep, that's a good point. I know a lot of people don't like to call it chores, and then they it's kind of their daily obligations. Let's see what else we got here. Flavio has a question. He says, "You all three are successful on what you do. Do you recommend that your kids go to college?" All right, Stan, you can go first on that one.
For that one, it's tough. It really depends on the kid. I mean, let's face it, you have to kind of take on a case by case basis. If you have a kid who's academically inclined, he's ambitious enough to be able to continue his education in a college environment. Like, there's a huge difference between high school and college in terms of the academic environment. In high school, if you don't do your homework, your teacher's going to chase you down until you do your homework one way or another. Once you get to college, they don't care. If you don't do your homework, that's one less paper for them to grade. They have no idea, like, promise putting an F on there. So there's a lot more self-motivation required in order to pursue an education once you get into the college level. On top of that, if you have a kid who's able to find a degree, like, I am all for any kind of education, so I don't want to put down any specific degree. But at the same time, the reality is there are some degrees that are going to be able to give you a better return on your investment than other degrees. If you have a child who's really motivated to go down one of those paths, that could be a terrific way to really obtain a very, very lucrative career. Obviously, the STEM fields are the most common example. So if you have a kid that's really geared towards that route, then yeah, that's a great path to encourage them to go. On the flip side, if you have a kid who is much more hands-on, then trying to gear them towards going to a trade is also a amazing way to go about it. So you definitely have to take on a case by case basis. Ideally, my opinion was you want your kids to be able to be set up for success in any way. Like, the end goal is to make sure they have a comfortable life where they can take care of themselves. Whether that's college, whether that's trade, whether that's entrepreneurship, there's really no wrong path. It's just the individual needing to find the path that works best for them.
What about you, Joel?
Yeah, I just have an example in my brain of, speaking to someone who wants to purchase a home, and they've got over $100,000 of student debt. They make like $45,000 a year, and the career trajectory is pretty flat in terms of income, and so they're not going to be able to buy a house unless they house hack, right? Use the other unit rental income to qualify. This person that I'm thinking of, that wasn't their goal. And so, yeah, like Stan said, knowing your kids, if you're really good in your GPA in school and you're going to go into a field that's going to need a master's and go up the corporate ladder, for whatever reason, okay, cool. If you're not, and maybe you get a scholarship to help pay for school, that's one thing. If you're going and getting, $100,000 of student loan debt in a meager profession, does the debt versus the income doesn't match up? And it's just one of the biggest things that I really, really get frustrated is with how much the cost of education is just skyrocketed in the last 20 years. I mean, it's brutal. All the administration salaries. I mean, it's just the cost of education is terrible. So yeah, I mean, I definitely think that if you have the right type of leadership in the family and friendships, people that are doing things on an entrepreneurial standpoint, that yeah, going down that path and skipping college, it could be a great path. You don't have the debt. $100,000 of student debt with $1,000 payment. I mean, it's brutal.
Absolutely. It's kind of the same example you were talking about, where if you have your debt load that's going to be double your annual salary, it's going to take a long, long, long time to dig yourself out at. So are you willing to put off buying a home for the next 10, 20 years, that's a substantial financial hole to dig yourself out of. So if you asked me 15 years ago, I would have been all for, like, that's what I was taught growing up. Like, go to college by any means necessary, get any degree, and it'll work its way out. But now I know much better than that, where an education is still absolutely crucial, but now you really have to be more cognizant of the cost versus benefit analysis, where you should have a fairly good idea of what career path you want if you want to pursue college. And you need to figure out what do you need to do in college to set yourself up to get onto that career path. It's not just the education, it's also taking advantage of the other factors that can come into college that are very beneficial, such as networking. If you're in college, it's not about just going to class, that's part of it. It's like make connections with the faculty, make connections through co-ops, make connections through internships, make connections with other people that want to go into your field. That is another very, very large part of college that a lot of people don't really take advantage of. They just wake up, go to class, take the exam, go back home, and repeat indefinitely. But if they do that, they're not really getting the full benefit from that college experience.
All right, so Andy kind of has a two-part question. Says, what does everyone recommend for adult kids who are in college and will have student debt? How much will it affect them once college is finished? Two of mine want a house hack when at that point. And his part two of that is how tough it'll be for them because of the debt they've accumulated while in undergrad school, like trying to purchase a house, even to house hack. So, Joe, this might be right up your alley.
Yeah, I mean, kind of going back to the Strive for 25 mantra of increase income, right? So what are they going to be coming out in doing in terms of a job and income? And they already have the right mindset of thinking, well, I do want to house hack. That means they're going to have the right mindset of trying to be able to get in, grow their net worth. And it's not going to happen overnight. It's going to be a 5, 10, 20, 30 year, obviously, time frame. So the student debt part of it, it comes into play. We're going to look at it. We can use an income-based repayment schedule, which for that, 23-year-old, 24-year-old, their income is going to be, maybe it's 100, maybe it's six figures. I don't know, but it's going to be typically set up to where they're going to be able to get a low payment if they want to. And so it's just one of those things we'll look at. And then, if it's a factor, then we just adjust the figures. And maybe now's not the right time, but then we can at least put together a plan of what price range they can look at in the future as their income grows. But at the end of the day, if you're going to school and you're going to have, a trajectory to have good income, higher income along the way, then, obviously it's worth it to get the degrees.
I agree.
He's really saying a vet and mortician is their degrees, or
I mean, those are
vets generally get paid pretty well.
Mm-hmm.
I'm not really sure about mortician, but they're definitely a very big industry for veterinarians. So piggybacking on what you're saying, if they go to college and they come out with, they're $50K in debt, but they have a degree and a career that's going to make them $150K within a year or two of graduating, then they're on a great path. Like, they might have to put off getting that house for maybe a year or two in order to get that debt lowered a little bit so they can riskily afford more payments. But they're still on a great path in order to be able to accomplish that goal in a fairly short amount of time.
Mm-hmm.
So it really just depends on what is your realistic income going to be post-graduation.
And this is a personal question, Andy. If you want to answer it, you can. If not, no big deal. But just as a gauge, are you thinking that they're going to finish with more or less than 100K of student loan debt? And then, as Stan was talking about the income and then, the debts, FHA, right? 3.5% down. You can buy a quadplex, but it's the most flexible program in terms of debt to income ratios. Your standard rule of thumb on front end ratio, which you want your housing payment to be 45% or below your monthly housing expense. Conventional, you're capped at 50% total ratio, all in, all your things and all the credit payments on your credit report, credit cards, student loans, car payments, all that have to be capped at 50%. Whereas FHA, you can go up to 56.99%. So I see it all the time where someone has student loan debt and doesn't really matter, especially if you're doing FHA.
Here, let's say hi to
From a
everyone.
personal standpoint,
Hi.
Okay, give me 15 more minutes. Okay.
from a personal standpoint, when I graduated college, this was 15 years ago. I graduated with $70,000 in debt. At the time, that put me in kind of the top 10 percentile. Like I said before, I was not very good with debt, so I admit I put on a lot more student debt than I really should have, and I likely would do things different if I could do it again. But because I brought in that much debt, I had to wait about 5 years before I really bought my first house. My goal was pay off the student loans first, and I was able to accomplish that within 5 years. And then I bought a house immediately afterwards. But it's one of those things where, yeah, luckily I did have a lot of student loan, but at the same time, I also had a very good career projector that was paying me a substantial amount pretty quickly after my graduation. So there's always that cost benefit analysis that needs to be factored in. Like student loans are not the end of the world. A lot of people have them. It just depends on what you got at from. Like, what did that student loan get you in return? Did they get you a marketable degree, or did it get you a something that's not really going to give you much of an edge in the job market?
Hold on. Let's see. Yeah, the damn kid. He doesn't wake up for school, but he wakes up early when it's summer. Um, Flavio said, I mean, not Flavio, but Casey says, if my kids want to go to college, sure, but I don't want to force them to go. Harsh Reality to Fire says, if you're 18 and can live at home for free, hard to buy unit, you need to go get something of your own. Wait a minute, it's hard to buy. I think it's kind of easy to, when if you're living at home for free, it's hard to get that motivation, early, right, to go get on the property ladder. So I think it goes back to us trying to maybe help our children understand that. And so even yesterday we played the cash flow board game with my son again, and he's enjoying it. So we've been playing the kids edition, but I think we're ready to actually try the regular one. I haven't opened the regular one yet, so we'll see how that goes. But we've been playing with my dad too. So, but my dad's been winning. I don't know. I think he's cheating though. Um, MJ, what's up, MJ? He says, "Did I bring up the question to Zuber?" Yeah, we can, if we have time, we can maybe touch on that a little bit at the end. Let's see, educate. Let's see if there's anything more before we.
A question coming up from Troy Roberts.
Oh yeah, for you, Stan. So hey, Stan, what have you been seeing with your short-term rental bookings? How has price to bookings been working for you?
So far this May was the first time all year where our revenue from bookings was less than the same month last year. There is definitely a bit of a slowdown right now. We don't have any future bookings for the next couple of months. They are turning a lot more into last minute bookings, and the prices are a little bit lower now compared to last year. So there definitely is a slowdown right now in STR. I think that's kind of natural, where it seems that usually if people are hearing recession a lot in the news, the first thing they're always going to cut is the unnecessary spending, which a lot of times that means vacations. So people aren't traveling. That's going to have an effect on STR bookings. It's definitely having an effect in our industry, in our market for STRs. I know I've got other friends who do have STRs as well, where they're simply have not gotten bookings at all for months. Luckily, we're not in that position. We are still getting bookings. They are a little slower, but there's definitely been a noticeable slowdown in our market.
Joe, I don't know. Is yours in Florida? Are you still doing short-term rental on that one?
Yeah. I mean, it's going. I had some issues with the property manager and had to get a lawsuit done and injunction and this and that. And, year over year, I mean, each year the gross revenues are down. I mean, it's booked. I mean, from March through August, it's booked. It's just the the rents per night are actually down compared to where they were, in 2023, for example.
The post-pandemic years, that was a very good time for vacation industry in general. Mm-hmm. Everyone was just cooped up for 2 years during the pandemic. As soon as things opened up, it seems like everyone just was in a rush to travel anywhere and everywhere. So there was a giant boom in STR during that time period, and vacation in general during that period.
Oh, Troy, I forgot if you're still here. Oh, shoot, I don't have it. I'll send it to you later. I had James on Saturday on my live. James from Stellar Housing Solution. He was on. He does midterm rentals in New Jersey. And they're killing it up there. He says, yeah, he has like one unit that's booked for 2 years from one midterm tenant. So he has this one individual that's booked their place for a 2-year timeline or time frame or whatever you want to call it. But James started a school community that's free for midterm rentals, operators, and whatnot. So, Troy, I'll send you that link later. I know Casey jumped in and joined that community. I know Jen joined. That's it. Troy said exactly what they're seeing. Also, they drop prices to compete with hotels. Yeah, their pricing has dropped $20 to $30. Let's see. Yeah, I don't know if there's anything else you guys. I guess my son's up, so maybe I'll 5 to 10 more minutes.
I haven't seen Professor Oak since the last couple ones. I might as well just throw a Bitcoin drop for like a second because a lot of institutions are acquiring and buying Bitcoin, and everyone was talking about a massive explosion, prices going to the next stratosphere. It hasn't happened yet. We had an all-time high of 111, I think, and now it's on to 104. I think I wouldn't be surprised if you see another retesting of some previous levels. I'm not going to make predictions, but that's why I keep talking about increasing income. Increasing income, if you can figure out how to generate more income, and that work it compounds, then it gives you the ability to go invest in certain things, whether it be real estate or stocks or crypto or whatever. So if anybody has any income streams that they're working on, something that I'm talking about and sharing on my platforms, love to hear about it.
I don't know if he's still here, but Rad, who was tuning in, he's a new member of school. He actually, so he's in Florida. He just bought a place in Pittsburgh, but he was on the accountability call this morning, and he said, yeah, he's been waiting for this kind of moment for the Bitcoins. I think he might have cashed out on some of his holdings in that, and he paid cash, I guess, for this property in Pittsburgh, his investment property. But yeah. Heider says, yeah, we're still early. He's bullish on Bitcoin. Yeah, I don't know. Anything else you guys want to wrap things? If you guys don't mind, MJ wanted to just maybe the school community real quick. So there's been kind of some discussion about the school community. So it is a $20 monthly fee for Zuber's school community, and it's for what you get. I think the price is very reasonable. However, there is people that feel, that because they're paying, they would like more things, I guess, kept in school. So a lot of times Zuber does live recordings on Sundays for Q&A, and then he posts it on YouTube after, right? So I think some people joined and felt that, these type of recordings would only be exclusive for the school community. But if it's on YouTube, you're not able to ask those questions, right? Because it's just a recording. So that's been kind of the topic going on in school right now. And after MJ brought that kind of point up, a lot of people did feel that they would like it kept in school because some people feel like they wouldn't open up as much if they know that the recording was going to be put out on YouTube after. But then Zuber also said, hey, if there's anything, he'll edit it out so people can just, always mention it today, maybe can you cut out my portion of what we talked about on the live or whatnot. So, but yeah. Still waiting for Joe to join school.
Yeah. Yeah. On a list of things to do.
Oh boy. All right. Stan, what do you work? Anything you want to finish up with? What you got going on? Yeah.
Well, for the most part, all we're doing right now is doing additional renovation of this property. Sorry in advance. I'm sure if you guys are hearing like a little bit of hammering in the background here and there. That's just an ongoing renovation we have on this property. Uh, Probably not looking to buy any other properties in the near future, maybe a couple more years. The big advantage that we had, we were able to find this property because there's a lot of deferred maintenance that was put off by a previous owner. So we were able to get it at a fair price. Now we're just kind of slowly working our way through all that deferred maintenance and getting this house into the condition that we would like it to be. So that's the main project that we're focused on right now, in addition to finding ways to continue to market our STR to get bookings more, bringing more bookings one way or another.
Actually, I think I do have it. Hold on. Do I have Hyder's? I think I did save it last time. So Hyder is starting on the YouTube channel. Oh, there it is. Safe Streets. So let's go all subscribe to Hyder's new YouTube channel. When he gets back from Alaska, he'll talk about it a little bit more. His new project that he is working on. And then Flavio, I think this was to you, Joel. It's only $20 a month, Joel. And then Joe V said he'll help you. He said, Joel, give me your credit card number. He'll sign
Send it
you
on
up.
over.
Yeah.
Right.
Joel, I see you with a lot of, I don't know which pages to share for you anymore. So maybe help everyone out. Tell them, kind of update them on what you're working on and where's the best place to connect with you, because you have so many platforms now.
Yeah, right now I'm focused on my YouTube and Instagram platform for the lending piece of it, my day job. So I did put it in the chat, my lending for entrepreneurs page. So Joel Farrell, if you find me on YouTube, yep. And then Instagram, if you just search for Joel Farrell mortgage, you'll find me. But I'm posting every day about stuff. DSCR loans, cash outs, multifamily, bank statement loans, blah, 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 blah.
Cool. Yeah, everyone. It's a good one. Thanks for tuning in. I'll be back tomorrow with Denzel, agent investor in Detroit. Will be back. It's been a while. He's been doing a rehab, and previously he had a fire in one of his units, so he's been dealing with that for a few months. He'll be back on tomorrow. And Liam is a agent investor who works with Jeremy Taggart in Pittsburgh, so he'll also be on tomorrow. And Denzel's topic he wants to talk about is it better to rent than buy a home in this environment right now? So that's what we're going to discuss. And of course, if you have more information, if you want to know more about the Detroit market or Pittsburgh, also tune in for that and send your questions. But everyone, thanks for tuning in, and thanks, Joel. Thanks, Stan, and we'll get you folks back
All
on
right.
again.
Thanks,
All right,
Mark.
everyone. Okay. Bye.